Yo, what's happening, guys? It's a boy Mutupi. Welcome back on my YouTube channel. On today's video, we are going to be looking at the market. So we're going to have a market breakdown. At the same time, we're going to have a market talk where we'll be able to speak about some of the things that you can look into moving over the week. And one thing that I like about this is that with these episodes, they help out someone out there to be able to execute the right trades, make the right decisions when it comes to the markets. And not only that, but also be able to analyze the markets on their own, because with the markets, like once you are able to get that skill of you being able to analyze and see the markets on your own, that means that you can go a bit more further and you can increase your skill, you can improve your skill, and the more you improve it, the better you can be able to learn or even earn. So that's what we're going to be looking at, the market breakdown for today's trade. At the same time, guys, I want us to also get into, if you haven't yet subscribed to my YouTube channel, make sure that you do subscribe, because this is what I talk about. And like this video if you do find value into watching these videos of mine. So let's get straight to it, guys. So remember, before diving into the markets, because I'm looking at US30 here in front of us, the previous week, I believe it was the previous week, where we spoke about, like, if you are looking into, like, trading with a specific broker, and I mentioned AAAFX and all those things, and I saw from the comment sections, like, there was a lot of you guys that gave me positive feedbacks. There was a lot of you guys that actually came up with questions. There was a lot. And just to answer some of those questions, like, I noticed some of the minimum fund deposit that's actually needed. And with my understanding, with my knowledge, I noticed that it's $300. So obviously, with most people being able to start with $300, it can be a bit more costly for others. But it doesn't mean that, like, $300 would be or should be costly for you, because at the end, there's an investment that you're making into your own account. There's an investment that you are, it's not like you're giving that money away to someone else. So that money is the money that you are giving it to yourself. Do you understand? So when you do invest, like, let's say even if it's $1,000, that money you're investing it to yourself. So even if you make 10% of $1,000, that's $100. That's a lot. Like, you are able to grow with, and you can even withdraw your money anytime you feel comfortable with, let's say if you don't want to still continue trading or doing specific stuffs and all, so that's what I wanted to make it clear in terms of the minimum deposit, just so you are confident and if there is, like, a move that you actually do really want to be with. But for me, I'm excited. I've been tested, I've been just checking out certain things with them, and I've seen that they actually are a good broker. But at the same time, I also want us to, like, maybe on the next video that we have, we're going to go through the process of depositing money into a trading account with them, and as well being able to execute our very first trade, looking at some of the instruments that they have, because so far I love them. And you guys do know that, especially in terms of currencies, like the currencies that I normally look at is GBP, JPY. And in terms of currencies, there's a lot of brokers out there that, like, would give us a lot of spread difference in terms of the currencies, like the price that you'd be buying or selling on that currency. Find out that you have to at least hold the trade for like 10 pips before it gets into profit, or 20 pips before it gets into profit. So with them, I liked the fact that they were, like, the biggest spread that I saw was like GBP USD, which is, I think, I forgot, like 1 point something at that time. Yeah, let me just come back here and confirm with it. At the time, GBP USD, when I saw it, was still 1.5. Now looking at it, it's 1.5. So imagine 1.5 pips as a spread. That's like a lot. You can save a lot, and this would go for a lot of people out there that are, like, looking into trading your currencies, into, like, excelling with currencies, getting that data and growing that data. So yeah, that's it. So I did show you guys how you can register an account with them, be able to verify your account, get it verified within 20 minutes. You guys did see that. And even now, you can go to my previous video where I did speak about it. I'll leave the link in the description where you'll be able to still watch the video again. And on the next video, now we're going to be going through how you can deposit, fund your account, and start, like, literally executing that first live trade. So that's what's going to happen on the next video. So yeah, I'm holding you guys by your hand. We are doing this side by side. So that's something that I've said that I'm going to be doing with you, and I love doing that. So getting straight to it, let me just open up and start recording my screen here on the side. Okay, perfect. So getting straight to it now, guys, like, looking at this, we are now looking at US30, a very beautiful position here. And I want to start off first with, like, going to the bigger time frame, the daily time frame, because, like, yeah, it's a new week. Maybe, like, the market have closed with specific candles and stuff. Let's even just go all the way back to the weekly time frame. Weekly time frame. Let's see what the last week candlesticks closed like and what we can make moving forward. And yeah, let's just take a look at that. So looking at US30 in front of me, I can simply see that, okay, the previous 3 weeks, there was a spike, 1, 2, 3, 4, 5. The 5th week before, there was a huge spike to the upside, and then price didn't have that much momentum to continue pushing upwards, so it started slacking a bit, even though it gave us just a few red candlesticks, which means that the market for the past few weeks, it has been slowly going downwards here and there, even though we're seeing a lot of rejections, which means that it is trying to push down. But because of the fact that there is not much of momentum to the downside, obviously price is going to keep doing what? It's going to keep rejecting the lows, just so maybe it gets to a significant area whereby it's going to start pushing upwards and gain momentum for those buys to be able to start moving or continue rallying to the upside. So moving to the 1 day to the daily time frame, I was able to spot our previous resistance area that couldn't be broken. Eventually it got broken, like with the huge candlestick momentums, engulfing even candlesticks, that shows that this price actually, or this zone, this significant zone, was an area whereby it couldn't be broken. But now, because it broke with those candlesticks, it shows that there's a lot of momentum still continue to the upside. I like the fact that as soon as it broke out, it still came back to retest this area. So let me just show you what I mean. Resistance here, you can see here, support, the resistance here, it broke out massively, then it came back to retest here, then it went upwards. Now this is a retest that we got now. So now this is what I've been looking at in the past few weeks, in the past few days. This is the retest that we got, and price after that specific retest, guys, if you take a look at it, price literally just went back with an engulfing candlestick on the daily time frame to the upside. We barely see engulfing to the upside, so now we saw a beautiful one. This is amazing. I got excited and I was like, you know what, this was, I think, on Thursday. I was like, you know what, the market is ready to just continue going to its specific direction. So let's start capitalizing on buys. We did get some buy positions, and if you didn't see some of the trades that we took, go in the Telegram public group. I'll leave the link in the description. Get in there and see some of the trades, how we take them before, what is my mindset before, what do I say before I even take these trades, because at times I'll show a buy and a sell, and someone out there would be like, this guy here is showing a buy and a sell at the same time. He doesn't know what he's looking at. At that time, I know what I'm looking at. I know that the buy has more potential compared to the sell in terms of risk rewards, but the sell also doesn't mean that if it doesn't happen, if the sell actually does happen, I can still bank maybe a 2% or a 2.5%. You understand? So I'll be looking at what the market is telling me, and then when it does break, let's say for that sell that I was actually looking at, then I'll be able to secure a trade and then go down with it. Even if it breaks for that buy, it's what I'm preparing. I'm preparing for both scenarios. I'm able to prepare for both scenarios. So when they do happen to play out, I know how to react to it. So imagine you're looking for a buy and the market sells, and that sell, you saw it coming. You saw market is going to break and go down there. But because you were too stuck up on a buy, you don't even capitalize on that sell. You understand? So we don't want that, guys. This is the market. You need to capitalize as much as possible by limiting guessworks and taking chances and stuff. So daily time frame here, let me go down all the way to the 4 hour. So on the 4 hour chart, guys, remember I like doing my patterns on the 4 hour chart. So I got my movements on the daily time frame. On the 4 hour chart, normally what it shows me is that it shows me some of obviously it's an impulse. I get my pattern, and this pattern, from what I'm looking at here, it's a pattern that breaks to the upside. It's a continuation pattern that breaks to the upside. And I love the fact that, let me just come here and get this tool here. I'm not sure where I can, okay, I think it's here. This tool right here. I like the fact that, with this also, take a look at this. Take a look at this, and take a look at this. Take a look at this. So obviously this is the left shoulder, this is the head, and this is the right shoulder. And if you're not seeing it too clearly, guys, if you're not seeing it too clearly, it's okay. I don't have problems. I will just zoom in and then come back and show you guys I'm using the specific tool that I normally use for head and shoulders. So I'll just come back here, go a bit more to the downside. Okay, what happened? Where is it? Right here. Come back here, go left shoulder. Right here, head, right here, boom, right here, right shoulder. Okay, so you can simply see that price is trying to show us a left shoulder, head, right shoulder type scenario, which means that a head and shoulders in this case, but not even just a head and shoulders, an inverse head and shoulders, which is much more better. Looking at it like in terms of us looking at a continuation pattern, looking for buys strictly and all those things. So coming back, let me go to the 60-minute. So now on the 60-minute, I need to be a bit more careful with how I capitalize, my opportunities. So obviously this was a huge price moving downwards, and so far I can see that price right here, there's a specific zone right here, specific zone right here, And right here so far there's a beautiful specific zone as well right here. Okay, so here where price is at, even if you just come to this most recent right here, let me just do this, keep it as tight as possible. So you can simply see that obviously right here, one thing that I was looking at is, like, let's say with sellers, like a seller scenario, obviously I did say that we're looking for buys. That means that I'm only looking for buys. But in terms of a seller scenario, because what this can happen is that in we normally do teach about, like, in the triple we teach about override. So when an override happens is when the market, like, let's say it would impulse downwards like this, give us a retracement, but that retracement would give us, like, sort of like structures or patterns that we normally spot in the markets that would continue right into the downside, but in a much more professional way and a much more higher probability way, whereby most people out there won't be able to catch these trades. So this is one thing that we've been able to do, to teach ourselves, teach our eyes there, to be able to see the specific patterns that play out in the market whenever they repeat, so we are able to know what's more likely to happen with them. So that's how we came about with the override. That's how we learned with the override. So with this, like, looking at an override, maybe this would happen, coming back down here, also a third touch here, and then maybe then price would go back to the upside now. But for now, I'm not looking at that happening. For now, I believe, like, already with the structure here, we're still left with like a few more minutes to go. Let me just take a look at the 30 minutes, what it's saying. Huge impulse to the upside. Okay, so I think on the 60-minute now, what we're looking at is when price happens to close above here. Obviously, we can mean that, like, also depending of how the candlestick have happened to close, we can look into maybe price coming back to retest here. Once it does come back to retest, then automatically we'll go a bit more to the upside with it. Once it does retest, we'll go a bit more to the upside with it. Keep our stop losses a bit more tight right here, and then go a bit more, have this be our first target, 4%. But guys, remember that we're still going for the bigger time frame take profit. We're still going for the 90% rule, which is here 10%. We're still going for that bigger time frame, 10%. Just that now we're not being too ambitious. We're just locking it to where the worst case scenario. So our worst case scenario can be a 4% in this case. And then coming back down, let me just show you why I drew the other area, significant zone right here. What could happen is that when price happens to, obviously it broke up, it couldn't break, it broke above. Here it tried to bounce back, but it actually did break below. So here you can see that it's bouncing back. So this is also indicating for me, meaning that if I do happen to buy here and price breaks above here, the first thing that I'm going to do, I don't even care if it's at 1% or not. The first thing that I'm going to do is that I'm going to move my stop loss from here, bring it to break even, cut all losses short. I'm in profits, I'm at the resistance. Why would I still want to risk some of the profits that I'm holding? Let me take down risk free, and then from there it's all about management. Remember, if you don't even have a stop loss, you're going to manage a lot of losses, because a lot of trades that are going to be running would be in terms of the loss side. But if you've got a stop loss, your losses are going to be cut short, but you're going to manage a lot of profits. Then that's when you can scale and go to the positive side of it. And that's what I'm looking at. So when price breaks here, I'll be putting my stop loss and I'll be going up with it. So even if it's now impulsive and then it happens to close somewhere above here, then maybe with this, I'll just maybe go to a smaller time frame. I'm not too comfortable with taking trades that have, let's say now, for instance, you see here, with this happening here, I highly believe there's a high chance of this happening and then this happening. Because for me, I wouldn't take a trade as simple as this when it's here, because it'll allow me to just play a bit more. Like I'll experience a longer drawdown. Like if it does go down here 50%, I nearly lost 50% of the amount that I had at risk. Unless maybe like I take a much more riskier entry, and then maybe I can spy where it's at, then I can just come up and put some of my stop losses here. Even though when this happens, it means that I'm okay to take losses in terms of if price happens to come down and take me out and then come back up, I should be having that mindset of yes, stop loss is going to be hit, but when it does get hit, I shouldn't mind re-entering on the trade. So you understand that there's moments whereby the way that we trade is not the same in the markets, guys. The way that we trade, I can be comfortable with re-entering on a specific trade. You can maybe not even afford to re-enter. Maybe you're not comfortable re-entering. So you shouldn't be looking into some of the methods someone is entering and then that you can implement it. Look at their skill, their strategy, look at how they are seeing the markets. Take that, implement it into your own, and then from there build something that can work out well for you, because now you can see prices pushing downwards. This is what we've been waiting for. Once it gets somewhere here, and like what can happen is that, like, you know, if you are like, you know, day trading type thing, what you can still do with this is that take a look at this. This is a beautiful price got up here. As soon as it got to resistance, it gave us this undecided candle. So you can have your stop loss here by right below this candle here. Take profit anywhere below here. So you can still bank close to 1.4%. Like, mean that if you had 1,000 at risk, you can still go back home with 1.4, which is still good, and it's much more quicker. Like, it's gonna hit take profit quick or stop loss quick. But you need to know how you're gonna react in terms of when the market plays out in a specific way. So even if you sell hoping to come down, if it goes out and takes out your stop loss, and now it's going up for that buy, you shouldn't be like, no, it didn't go the way that I wanted. 1, 2, 3. No, you saw a buy it first. You were just trying to take maybe 1%, you know, just trying to go down with it for that short trade. It's okay, continue, go for the 10%, because now you lost 1%. But what if you go for that buy, that 10%, then it goes in your direction, you made 10%, so your total profit would be 9% instead of just the small percentage that we're looking at. So this is also a possibility that can happen, right? So I know you guys are like, yo, this guy here, he's showing us, like, you know, different ways on how we can capitalize and stuff. That's how it should be, guys. You shouldn't be looking into just doing one thing. Okay, so with GJ, some of the ways that we actually even manage this one here, I share this setup in the premium team. I share it right here. I'm not sure if I did speak about it. I shared the trade when it was still here, when it broke out. Stop loss was here 47. We sold and we're looking to go all the way down here with it 6%. Price went down, boom, boom, and as soon as we had this, it went down. When we shut down here, I was like, no guys, no need of us to have our stop loss here. Let's move our stop loss, because now I was trading in accordance to this specific pattern here. I was trading in accordance to this pattern, this one here that I've drew here, this one here. So looking at this one here, once it broke out, I moved my stop loss to 162.063, which is here. So now I went from risking 1% to now risking 0.20%, meaning that if I had a total loss of 1,000, I went from having that 1,000 rand loss to now being 200 loss. You understand? So much better, risk off the table, I'm safe. Even afterwards, price started shooting upwards, it went upwards. It took us out, I didn't panic, we're still good, even though, because it's nice, you don't go from holding profits to giving it back to the markets. You go from holding profits to either just seeing that the trade is not working out the way that you wanted, so cut losses short, or it's either you just manage and go back home with the most that you can actually capitalize, just like the previous trade that I showed you on US30. So looking at this one here, let me just clean this chart. I think now we have broken the structure highs. So now we're just looking for buyers. Yeah, we've broken structure highs, because here we are, structure highs right here. Boom, broke, came back, retest, higher high. So we're creating higher highs and higher lows. So coming back down to the 4-hour chart. For our chart, obviously, I'll just have a management line that's going to help me be able to just guide through onto what's actually happening. So that's what I would have. This line is just managing me. Obviously, I can see that this upward trend is actually a bit more steep. So let me just go back down to the 16. Coming back down here, I'll just be able to spot that. Obviously, that's a higher low situation. This is what price is telling me. Higher low, higher low, higher low. Engulfing candlestick. Let's take a look at this engulfing candlestick. Engulfing candlestick. So this one here is like literally ready now. And with this one here, I'm more likely to buy here where it's at. Stop loss super minimum right here. And even if I target 73%, because like the ranging market on GBP JPY, there's a high chance that you can break that 73 pips. So even if I take a 73 pips, which is like 3%, this is still a very profitable trade that we're going to be capitalizing on. So this is one that I'm also excited. I'm ready. I believe that this is that one that I'm going to be sharing in the app with my team members. So what happens is that you guys, we do have like Forex Thesis app, whereby you can be able to just access some of these trades that we share, some of these live trading ideas, and also some signals that we're going to be sending out soon in the trading app. There's a number of mentors that are also in the app, and we are now building the app so they can be able to just grow and become the best app that it can actually be. So the value, or even the idea that we have with the app, is to create an all-in-one solution for all traders out there, just so they're able to access what they need, their trading tools, everything that they need, the resources that they need, in just an all-in-one solution. So that's actually going to help out. It's built for you. It's built for traders by a trader, because like it's built by myself, and obviously I'm a trader, so I know what traders need with my years of experience. Obviously someone out there that maybe started trading now, or maybe a year ago and stuff, would say, no, 1 2 3 1 2, they believe that they have certain things that they can do or say. But even though their opinions do matter, but like at the end, guys, it's actually like the experience that we are looking at, like with someone being able to say this and this and this and this, I've tried this and this and this. Like there's a difference between someone that's saying that I know this is gonna work and this is not gonna work, just because of they think that they know, you understand. But there's also a difference into someone that says, I know this might work and this might not work, because of the experience that I've been through, you understand. So those are things that I actually did go through. Those are things that I actually have been working on.